Hey, good morning. So markets look very, very overbought, extremely overbought. And this debt ceiling is going to happen today. There's going to be a vote in Congress. There is a chance, in my opinion, a high chance that it won't pass. However, that's not market opinion. Overall market opinion is that it is going to pass because the US is not going to go into default. However, if it doesn't pass and the market goes into default, then you could see a major sell-off in financial markets. In my opinion, the markets are so overbought, they're due a significant correction. Remember, money's expensive. When you have cheap money, markets move higher. When you have expensive money, markets move lower. But the markets have not moved lower as a result of the expensive money. And we've had lots of reports out, so let's go through one at a time. Let's start off with China. The property sector looked like it was picking up in China. Effectively, it's gone backwards again, and residential sales have fallen, commercial properties on the floor, and it looks like it needs to be resuscitated with a huge package and a huge economic booster from the Chinese central authorities, and that's not going to happen. So the Chinese property sector is down. Moving on to, that's in the Far East, moving on to the West. In the US, commercial property is down. Commercial property is down at least 30%, up to 50%. There are certain areas in the States, certain cities, where there's whole vacancies of property, where no one has taken up commercial property, no one is renting, and businesses are vacating the properties. That is a bad sign, and that's going to follow on into residential property. So you can expect not only a commercial property crash continuing, and at the moment 30-50% is huge. Will it get higher? And you're going to have a residential impact, a residential crash of around about 25 to 30% by mid-2024. That is likely to happen. Moving on to financial markets, Nvidia. Wow. So Nvidia touched the $1 trillion mark yesterday. However, technically it's well overbought. Not only is it well overbought, it looks like it needs to drop by at least 10%. However, with all the enthusiasm in the artificial intelligence arena, it is pushing up all the shares up to sky-high valuations. C3 is coming out with the results also today, this evening, and they're going to have, they've already given advanced warning that their indication is that their profits are going to be much higher than expected. You've got Palantir is moving up. I've mentioned Nvidia moving up. Marvell Technologies moving up. You've got a hell of a lot of AI. That is the new trend at the moment. But in my opinion, the boom's going to continue. That's for sure, because we've only just been going around for 6 months. So we're not even anywhere near the end of the boom in AI. And those AI providers and semiconductors are going to benefit from this boom. However, be aware of overpriced valuations when it comes to that particular shares or any shares. But at the moment, they are on a run and they could be well overvalued, looking for a correction in the near future. Going back to now where we're at with Congress and the debt ceiling, the Republicans are not really happy with the agreement that Kevin McCarthy, Speaker of the House, came up with Joe Biden. I'm surprised Joe Biden was awake during the meeting, but assuming he was awake, the Republicans are not happy, and some Democrats are not happy with the terms of the raising of the debt ceiling. So there is a risk that it might not pass through Congress today. Be aware of that. As mentioned earlier on, if it doesn't, there will be a sell-off in financial markets. Now, most of the market has priced in that there will be an agreement. However, look at the oil sector yesterday. Oil tumbled on the fear of a no agreement as far as the debt ceiling is concerned. That is also moved on to the dollar. The US dollar was also down on concerns that the debt ceiling will not be agreed or will not be raised. Those are warning shots. Expect oil to pick up dramatically if there is a debt ceiling agreement. For the thought of the US going into default is so remote as far as some people are concerned that there's going to be an agreement whatever the price is as far as the US is concerned. What you've also got is other concerns globally you've got to look at. We've got rising interest rates in the UK, and you've got the Middle East crisis. Iran is bubbling along on doing something. You can't really trade on the back of fears of Iran doing something, but those are some concerns in the background that Iran, which is the #1 sponsor of terrorism globally, is on the verge of making a nuclear bomb, or as we say, as there's well known, at least 5 nuclear bombs, and that would be a major threat to all of the neighborhood in the Middle East. But that you can't really trade on the back of that, because any type of geopolitical issues that aren't there yet, it's very difficult to trade. That's it for now. So if you want to subscribe, share, comment, more than happy to hear what you've got to say. Mayor Valensky with Driving Markets. Have a good day.